about the definition of bank, the formal definition of the banking talks about, which is given by Banking Regulation Act 1949. It talks about that banking means the accepting for the purpose of lending on investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order or otherwise. Now, this definition is complete in its sense and defines the entire banking function, the entire working and nature of the banking is given in this particular definition as quoted by Banking Regulation Act 1949. So we are going to break this particular definition into point by point. We are going to explain it in this particular thing. So we have seen the definition that it means the accepting. Now coming point by point the explanation about this particular definition. So banking means accepting. What we are accepting, why we are accepting. So the accepting, why we are accepting the funds. Now the question is, banking means accepting. Accepting of what? Accepting of the public fund, accepting of the amount which is deposited by the public. And why banks are accepting? Banks are accepting it. Now this is the breakup of the entire definition. So it's important to understand we are accepting. The banking means the accepting. Why banks are accepting? For the purpose of lending or investment. So we have studied that banks are accepting deposit for the purpose of granting loans and advances. And when we talk about lending, we means directly through loaning activities. It means loans and advances. And when we talk about indirectly we are talking about investment. So banking means the accepting for the purpose of lending or investment. What banks are accepting? Of deposits of money from the general public, right? Repayable on demand or otherwise. Accepting for the purpose of lending or investment of deposits of money from the public, but it has to be at the same time, it has to be repayable on demand. Repayable on demand means that whenever the customers are demanding their money back from the bank, whatever they have in their accounts, so bank has to repay that particular amount to their customers, right? Or otherwise means it's whether it's on demand or otherwise, which means that sometimes in case of FD and RD, there are cases when the customers are not demanding their amount, but then also after the maturity of that particular time period, because FD and RDs they are known as the term deposits, and after those specified term, after they get matured, after the term got expired, automatically the amount will be credited into their account, right? So repayable on demand or otherwise. Repayable on demand means whenever the customer is demanding the money, also banks are giving them back, repaying the amount, or otherwise, which means after the expiration of the fixed tenure, right? But this repayable on demand does not mean that you're giving a call to the branch manager or you're giving call to the bank manager or any of the banker and then asking late at night, early in the morning, on Sundays, on 15th August or any other public holidays. No, this repayable on demand function can be executed with certain protocols, and these are known as and withdrawal by check, draft, order or otherwise, which means that this repayment on demand can be made by specific modes, and these specific modes with the help of these specific instruments which are known, and that can be withdrawal, that can be repaid by a bank only and only with the help of by check, draft, order or otherwise. So if we club all these things, we'll get the definition in this particular format that talks about that banking means the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and it is withdrawal by check, draft, order or otherwise, right? So this is the entire breakup of the definition. Now it covers the entire functioning. It covers the entire mechanism of what banking in India means and its deals about, right? So it is accepting for the purpose of lending or investment of money from the public, which is repayable on demand, and that repayable on demand can be made with the help of check, draft, order, or otherwise. Here, check refers to that instrument which is very helpful in withdrawing from the account. Draft means demand draft and manager's check. Order means your pay orders, and otherwise means any other mode other than these: check, draft, order, right? That can be debit card and ATM cards, etc., right? So this is the summary of the this is the breakup, point by point breakup of the entire definition which is given by the Banking Regulation Act 1949. So this is as far as the meaning, definition and concept of banking is required, right? So after that, again, this definition has certain ingredients into it. So ingredients here talks about that what completes the banker, what completes the entire banking. So there are few things that on the basis of this Banking Regulation Act 1949, any institution that fulfill the following condition must be treated as a banker or bank, and these are as follows. The first mandatory condition, the first condition is that two mandatory functions must be performed by banks. The very first condition is two mandatory function, and these are your, on the one hand it is acceptance of deposit, another is lending and investment of such deposits. So two mandatory functions need to be performed by the banks, and that is acceptance of deposits and lending of those deposits into lending activities and investment of such deposits. After that, the second point is deposits of money payable on demand. That talks about the concept of repayment on demand. And when we talk about repayment on demand, so I have also quoted that repayable on demand is with the mode, and that forms the third is or withdrawal of this demand. This money has to be gone through, has to be taken care with the specific modes, and these are like your check, draft, order, or otherwise, where order includes debit forms, written order, withdrawal slips, cash order, etc. And in addition, if we want to talk about, in addition to check, draft, order, or deposits can be withdrawn through other modes also. For example, the deposits can be withdrawn through simple receipts. The fixed deposits made by the bank can be withdrawn through simple receipt, right? That is known as fixed deposit receipt, FDR in short form we talk about, right? So these forms the basic ingredients of what completes the banker in itself, right? Now, after understanding in detail about the ingredients of the banker, the formal and legal definition given by the Banking Regulation Act 1949, let's come to the banking in India, how banking in India emerged, and this I would like to explain with the help of a short and the simple story. Like banking in India in the modern sense originated in the last decade of 18th century. So somewhere around in the last decade, last 10 years of the 18th century, exactly the banking came to India. Right. Among the first banks if we talk about, there was Bank of Hindustan, which was established in 1770 and liquidated. Liquidated means that completely wind up its operation in the year 1829. Until these 3 years, the process of liquidation was carried out. So Bank of Hindustan from 1770, and it liquidated in the year 1829 to 32. And then General Bank of India. So among the first banks were the Bank of Hindustan and the General Bank of India, which was established in 1786 but failed in the year 1791. So there were two banks, Bank of Hindustan and General Bank of India. And as far as today's scenario is concerned, the largest bank and the oldest still in existence is SBI, and that is State Bank of India. Now come to the history of State Bank of India, because it is one of the largest bank and oldest bank which is still existing in India. So State Bank of India, it is originated as the Bank of Calcutta in June 1806. So Bank of Calcutta in June 1806. In 1809, it was renamed as Bank of Bengal, right? So Bank of Calcutta in June 1806, then it was renamed as Bank of Bengal in the year 1809. Then this was one of the three banks funded by the presidency government of that particular time, and the two other banks were Bank of Bombay and Bank of Madras. So do not write whenever you being asked for Bank of Chennai. So Bank of Chennai, since it's a proper noun, so it has to be Bank of Madras. So Bank of Bombay cannot be written as Bank of Mumbai. So Bank of Calcutta in June 1806. In 1809, it was renamed as Bank of Bengal, and the three banks were merged into to form SBI. Out of these three banks, Bank of Bengal and Bank of Bengal was one. The other two were the Bank of Bombay and Bank of Madras. Then these three Bank of Bengal, Bank of Bombay, and Bank of Madras, were merged in the year 1921 to form the Imperial Bank of India. The name was Imperial Bank of India, which constitute the Bank of Bengal, the Bank of Madras, and the Bank of Bombay. These three banks were merged, and the single name was given, that was Imperial Bank of India, which upon India's independence became State Bank of India in 1955. Right. So this is how the State Bank of India came into existence. The name was literally given as State Bank of India. And again, in the year 1916, the State Banks of India was given control of the state associated banks under the State Bank of India, that is Subsidiary Banks Act 1959. So these are now called associate banks. If we talk about there were these banks. Earlier, State Bank of Bikaner was in different, State Bank of Jaipur was different, so they were merged in between. They formed into one, that was State Bank of Bikaner and Jaipur. Earlier, these two banks, State Bank of Bikaner and State Bank of Jaipur, were different entities. They were merged together and formed State Bank of Bikaner and Jaipur. Then another was your State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala, and the State Bank of Travancore. So these five banks were also known as state banks, subsidiaries, or associate banks, or subsidiary banks of state banks, right? But the most important part, as of now, if we talk about the present situation, these banks now does not exist in an Indian banking structure. Now these banks have been merged into SBI on 1st April 2017. Right. So this is a brief history about SBI and its associate banks. So in 1969, the Indian government nationalized 14 major private banks. In 1986, more private banks were nationalized. These nationalized banks are the majority of the lenders in the Indian economy, and they dominate the banking sector because of their large size and widespread network. So this is about the basic history of Indian banking, the ingredients of banking structure or banking concept, right, along with the definition, concept, and the most important, the formal and legal definition given by Banking Regulation Act 1949. So this was all about this particular lecture. Hope we'll be having in detailed discussion, and we'll be having many queries during our lecture. With these words, thank you everyone. Keep learning, keep enjoying the banking. Thank you.